guys, welcome back to the channel. Welcome back to another video as we continue our trading with a purpose series, and we're following our four pairs: pound USD, pound JPY, NAS 100, and gold. Let's go ahead and talk about pound USD. We're going to talk about all four pairs, but we're probably going to break it up into individual videos just because each video is probably going to be pretty long to begin with, because I want to try to give you guys as much detail as possible as we break down essentially these pairs individually. So with that being said, let's not waste any time. Let's get right into pound USD. Now, looking at pound USD, at the beginning of the week, okay, we were coming off a peak formation high. So the bias was actually to look for sells. Because we were looking for sells, this is Monday. Did we get any kind of a setup that we would look for sells? If we just take a look at first the London session. So here's the London session. You can see price accumulating, collecting contracts, and then we essentially get the manipulation phase, which is this right here that happens at the beginning of the session. Okay, now the question becomes, is there anything here that's a sell setup? Well, no, there's nothing here that would have been a sell setup for me. Okay, so with that being said, on Monday, essentially there was no trade on Monday available for us to trade. But the important aspect of Monday is that we actually ended up getting our real directional bias for the rest of the week. Because what happened on Monday was these two big candles here is what happened on Monday, which essentially told us that we were going into a reset. Now, if you take a look at what happened on Tuesday, going into Tuesday, okay, this is basically Tuesday here, the consolidation that's happening here. Make sure that you pay attention to the fact that we've already closed, okay, we've already closed below these previous highs or even last week's high. All right, so because of that, we know that this is a reset and we're looking for buy setups. A question is, okay, now that we know we're looking for buy setups, are there any actual buy setups that would have met all of our rules to actually trade? Now, based on how price action is taking off right here from the middle of the range straight up, there's no trade setup as of yet on this particular pair. Now, some of you may have maybe thought that this right here, this pullback for two candles might be a type 4. Okay, for me, it's not a type 4. What is a type 4 is the next setup here, right here. This aggressive move for me is the type 4. So we have the aggressive move coming out of Asia going into London, and then we get essentially one major pullback. Now, I want you guys to notice the difference in first the move and the pullback, because for type 4s, the best tradable type 4s that I found based on the back testing data that I have is the fact that we don't want a small move like this. We want the real aggressive move essentially like this. Okay, that almost mimics like the formation of a type 1. Okay, so this right here is what we're looking for type 4, and then we're really looking for that pullback. And it's really important that that pullback goes to, in this case, the top of the Asian range and then immediately reverses. Okay, so this right here is essentially the type 4 pattern that we're looking for. Okay, so this right here would be what we're looking for out of this pair. Now, the next question is, where is our entry? Well, some of you might think that this right here is a railroad track. Well, to me, it's not, because the red candle did not cover at least 75% of the blue candle. Okay, it covered about like 60% of it or so. It was pretty close. I think it was like maybe 1 or 2 pips from 75%. But regardless, so all we're waiting for here, though, is the fact that because this is not a railroad track, the next thing that we would need is essentially price to close over the 13 EMA, which in this case it already did with the blue candle. So now do you have to ask yourself, okay, what is going to be the entry for this particular setup? Well, that depends on whether you are an actual aggressive trader or a conservative trader, right? It would all really depend on the next candle. If the next candle gives you a pullback, the pullback is your entry. If it does not give you a pullback, then you go ahead and obviously you enter the trade. So if you're an aggressive trader and you don't see a pullback immediately, which you don't get, you would actually just enter the trade right away. Now, here is the setup if you're that type of trader, right? Your stop loss essentially goes below the closest low of the candle, and then essentially you're just going 2 to 1 on this. Okay, so your trade setup looks something like this. Okay, if you are a conservative trader and you're really specific about wanting the best possible setup because of you want to take less risk on a trade, then that setup would be something to where, because of how big this candle is, essentially is you're looking for a major pullback that covers at least 50% of the candle. Okay, that would be basically you're putting in a limit order on this pair. So limit order would be somewhere around the middle of the candle, 50% of the candle, and then the stop loss still goes in the same area below the lows. Okay, so that way if you're wrong, you just want to be wrong right away so you can get out of the trade. Right now, look at how different the trade is though, because if you're just going 2 to 1 and that's it, that's your trade setup right there. Okay, this is your trade setup. You're basically risking 10 for 20, or on the other one, you're risking 17 for 34. Okay, so depending on what type of trader you are will depend on which approach you have, and there's not a good or bad approach. It just honestly depends on who you are as a trader, how you identify. There are pluses, there are negatives to each. Okay, so understand that this is highly important because this will essentially dictate whether or not you actually get into a trade, or sometimes you may miss a trade, because if you're the conservative trader and you're looking for that 50% retracement on the candle, you may not get it. And that's okay. You have to be okay with that, because if you don't get the retracement, then obviously you missed the trade. So as long as you're okay with that and you're willing to wait for the right setup with the right parameters for your risk and all that good stuff, then that's going to be, the type of trader that you are. If you're an aggressive trader that is not so concerned about with getting the most perfect entry on the actual trade setup, and you just want to be in the trade because you see the pattern or whatever the case may be, then this is going to be the setup for you. Let's take a look and see what ends up happening here for either trader. Okay, for either trader. So as we take a look here, you can see that the trader that got a buy limit order would have gotten hit. So the conservative trader got the actual entry that they wanted, and they were pretty much out within 30 minutes of the trade. Now, the other trader, the aggressive trader, had some drawdown, okay, and then now obviously is in substantial profit. But look what happens to price. It's pretty close, right, to almost to your take profit, but it doesn't get there. Okay, so if you're an aggressive trader, you have to be paying attention, right, to what's happening. And as soon as you start to see this type of behavior of wicks, and then immediately start to turn around again, you have to, start making sure that you're moving your stop loss into break even or into even some profits. Okay, because you don't want to turn essentially a trade that could have been either a small profit or break-even trade into a losing trade. Now in this case here, you can see what ends up happening going into the New York session. Now, a couple things that I want you guys to notice about in the New York session. Number one is look at how price reacted when we started to get into the New York session. and immediately started to come back. Okay, and this is really important to notice because when you're in the New York session, you're either looking for reversals or continuations. Okay, if price itself were to linger in this area, for an extended period of time here, as a New York trader, you would probably want to look for a reversal back down to the 50 EMA. But the fact that this aggressively started to come back to the 50 EMA at the beginning of the US session, you're essentially already, to me, I'm already paying attention to the fact that is it going to the 50, and is the 50 going to act as an area of support? So not only does it goes back to the 50, but it actually goes to the top of the Asian range again. Okay, so now essentially we get into a situation where I'm looking for a continuation trade. This here is going to be potentially the entry right here, because this is a star pattern that's happening on a continuation trade on top of the 50 that's already on top of the Asian high. So you have multiple areas or confluences coming in together. Okay, now the question is, do you get a pullback on the next candle? Because that's what you would want to use to get the best entry possible. So you do get a pullback. You actually get a wick. Okay, and so anywhere on this wick, anywhere on this candle is going to be your entry. It just depends on where you want it to be. It's up to you as a trader, right? Now, here are a couple things to consider as well. Is you have to consider the fact that, so this candle here, when it first starts out, it's doing this, right? And it goes all the way down and then retraces, right? So you have to have very good conviction here when you're getting into the trade, especially when you're seeing it go down like this. And at one point, this candle looked like this. So then you got to ask yourself, okay, well, if I get into the trade somewhere on the pull of this candle here, am I going to put my stop loss in right away or not? Here's what I do. In this situation, what I do is I actually wait for this candle to actually finish before I put my stop loss in, for this exact reason. Because if it's just wicking down here, okay, to get more orders before reversing and actually, going up like this, I want to make sure that I don't get stopped out. Okay, so for me, something that I do is I always put the stop loss in after the entry candle is closed, because that's what I'm going to use as a guide to where I should put my stop loss. Because if it goes and closes, let's say like this, okay, I'm going to take myself out of the trade, okay? Because in the setup itself, I'm wrong, and that's okay. And you have to be able to identify that quickly. The sooner that you can just identify that, you're better off, because you're out of the trade. You're not having to think overly and be emotional about the trade. If the next candle is this, like this, I'm hopping back into that trade, okay? Because I understand what's happening here. If I see this happening, a railroad track, I'm hopping back into the trade. If a railroad track doesn't happen, then obviously it's just not a trade for me. But if just understand really what's happening here is really the main thing that I want you guys to understand, is what's happening. We get into this trade here on the pullback. All right, once this candle is over, which is the next candle, then we already know where your stop loss is going. And then now you're just going, again, 2 to 1, and that's it. Okay, that's your trade set up there. There's your trade. Obviously, you can use the 5 EMA as a guide to stay in the trade as long as possible. Remember I told you last week, or in the last video, right there, right here is when you can exit the trade. So instead of a 2 to 1, you now get a 6 to 1 risk to reward ratio on a continuation trade. But here's the most important factors about this day, this one day, Tuesday, is I want you guys to understand this right here, because this is going to happen, especially now that we have Trump in office. Okay, He can send a message out on his social media account, and something like this will happen. This is something that's very, very credible in happening when we have somebody that can move the markets based off a tweet that they sent. For this specific day, this is March 4th, okay, the reason that this happened, the reason we got this wick is because Trump was actually speaking. So with that being said, all right, we got two trades essentially on the same day, a type 4 and then also a continuation trade. Going into Wednesday, all right, again, we're looking for buys, right? Based on where price action is right now, what would be the only setup that you're looking for? Based on this right here, if we're looking for buys, the only thing that we can get that would give us the option for buys would be another type 4, basically another pullback to the top, and then, you know, and then to go higher. Obviously, this is pretty, you know, aggressive move, and you don't get that. Okay, so there is no trade in London. Now again, I want you guys to pay attention to the beginning of New York. Where are we at in the beginning of New York? Are we near the London high or are we not? If we're not near the London high, then there's no way we could have a reversal, right? So we'd be looking for a continuation. All right, and that's essentially what we end up getting here, a continuation. Now, the problem with this continuation, though, is the fact that we don't get a good entry here on the very low, on the very bottom here, how we would normally want to. Okay, now what you could do in these situations, you could go to a smaller time frame, like let's say a 5-minute time frame, and on a 5-minute time frame you could see here that you get a star pattern. Okay, so if you're able to, if you want to go down to a 5-minute time frame, you could do something like that to where now you could take advantage of it. Okay, and now your trade set up, you know, 2-to-1 would look something like this. If you follow the 5 EMA, you'd end up getting like a 4-to-1. All right, but if you do not do that, and let's just say that you stick to the 15-minute time frame, then essentially you're waiting for a close above the 13 EMA, which is this big bullish candle. Obviously that leads to another problem, because where are you going to put your stop loss at is the next question. And then also you're pretty much already pretty far away from the 50 EMA, so you've missed out on a lot. So the only way that, to me, that this entry would actually work would be on a pullback. And you do get a decent pullback, almost half the candle pulls back. That allows you to get at least some kind of a decent entry on this. Okay, if that candle does not pull back, there is no trade for me. I just want to be clear on that. There is no trade for me here if that pullback does not happen, if I'm taking this on a 15-minute time frame. Now on this particular trade, you get well over 2-to-1. Obviously the 2-to-1 is right there, so there's a 2-to-1 trade for you there on a continuation. So London session, no trade. New York session, continuation trade on Wednesday. Now going into Thursday, again, still looking for buys. What do we have, right? So we have a pretty tight range, 25 pips or so, which is fine. And then we start getting price coming from the top to the middle and then kind of rejecting from the middle, okay? This would ideally be a type 3. But we need to get some type of pattern, either a railroad track, star pattern, or whatever the case may be, to take that trade. Now, obviously, this would not be a railroad track because the same thing as well. This candle does not cover 75% of the blue candle. So this is about 11 pips or so, 11.5. This candle is pretty much almost 20 pips. So we don't cover 75% of the candle. So this would not be a railroad track to take. Now, what you could do is you could do a limit order, or if you get a pullback on the next candle, what you could do something like this. There would be a 2-to-1 trade for you. Okay. Here's a couple things that I want you to notice. Okay. And as we play this out, the very next candle takes you out. Okay, you get taken out on the very next candle. Fine. It is what it is. That's a loss. Loss of 12 pips or whatever. Okay. Now, very important. Here's what you end up seeing on the. You get taken out, and then you end up seeing what I would think most of you would probably see is a star pattern. You would see this as a star pattern. There's nothing wrong with seeing it as a star pattern. All right. Here's what I want you guys to pay attention to, though, is the fact that you see how big these candles are and how they're essentially taking up the upper half of the range. So when you start to see candles that are this big, that are taking that much space, kind of I don't like to see, because it makes the patterns very big and bold. And so for me, I like to see normal style of patterns, and it's almost like, how can I describe it? Whenever you type something and you have the option of making it bold or regular size on the text, to me this looks like that, like bold, right? And so for me, when I'm looking at this is not something that I find attractive for a trade setup. Now, if you take this as a star pattern, which is fine, you're waiting for a pullback on the next candle, and there's your pullback. This pullback here should probably concern you for obvious reasons. For the reason, number one, that it pretty much retracted the entire move. Okay, so if you were to get into this trade here, this is to me, it's a very dangerous trade, because you have a couple things. Number one, the candle went up and swept highs that were sitting above the Asian high here, all right, and then immediately went down. And so the next candle, you can start to see what's happening here. So for some of you, you might have been taken out twice, but I want you to remember, if you're looking for buys, what's happening down here? Think about what's happening down here, right? We're getting into a range now to where you can get essentially a cord of wood. Okay, now cord of wood would be basically 4 bars, basically like 2 railroad tracks together, right? 2 sets of railroad tracks together. So where do you get 2 sets of railroad tracks together? Well, depends on where you're looking at, because there's essentially a set of railroad tracks here. This is a set of railroad tracks also, and this is, so you get 3 sets of railroad tracks. So which one do you take? Well, if you're paying attention, obviously, the thing that I don't like about this is that these two, again, did not cover the bottom half of this too, right? So to me, it just looks kind of off, right? But now when you do it like this, you can see now we have 2 sets of railroad tracks that are more equal to each other, right? So remember that in a cord of wood, we want the candles to be as equally length as possible. Okay, so in this case here, these 4 are the ones that you'd want. Okay, because if you look at these 4 here, they're not the same. You get what I'm saying? So we would want to actually take based off of these 4. Okay, so that would be the cord of wood that I'd be looking for. This is just essentially a type 1. And then the next candle provides you the pullback. And so the trade setup itself would look something like this. 2 to 1. I mean, 2 to 1 is barely anything here. You know, we're talking like 15 pips. So we're not talking very much space here. But you could see what ends up happening here is you get well over, you know, obviously 2 to 1. You could have possibly gotten up to 5 to 1, but 2 to 1, call it a day and you're done, and you're really done within 30 minutes of taking the trade. So understanding the differences between what is a good cord of wood, what's a bad cord of wood, or really the same thing when it comes to railroad tracks. So what's a good railroad track versus a bad railroad track, makes the difference, or will make the difference for you as a trader, whether or not you get into the trade. All of you have to have some kind of standard or rules to what you're going to be okay with. all of that, by the way, all of those rules that you make for whatever setups that you want to trade should solely be based off of your back tested data. Okay, what you've seen in back testing. To be honest with you, you just need, if you're going to be a London trader, you just need one setup to trade. You need to just trade one setup over and over and over again over multiple pairs. So let's say if you like trading type 1s, well, you could just be a type 1 trader and trade 4 or 5 pairs in London and see which pairs give you type 1s. If none of them give you type 1, then you don't trade it. So you could be so open to different things here. Honestly, it just depends on who you are as a trader, and can you identify who you are as a trader. The only way to identify what you're good at and what you're bad at is through back testing and forward testing, because that's what you get to see. I'm really good at identifying type 1s, or I'm really good at identifying type 3s, but I really suck at type 2s, or I suck at type 4s or type 3s, or whatever the case may be. And so the faster that you can identify that, the faster you can start to build your trading model, your plan over that specific model that you're really good at. Okay, there's a reason why the majority of my trades that I take in London are going to be type 3s, and also New York are going to be continuation trades. Over 95% of the trades that I take are going to be type 3s or continuations. I just am so convicted to those setups. So when I go through all the different pairs, I'm literally looking for if I'm looking in the New York session, I'm literally just scanning. Is there a possible continuation trade? That's the only thing I care about. Is if there's not a continuation trade, I'm like, I may not trade today. If there's nothing that pops out at me that's like, hey, this might be a good continuation trade, then, I just might not trade that day. I might just, it's a day off today, but I'm willing to do that because I know what I'm good at and I know what I'm not good at. And I'm okay with not being good at other things, and I'm being good at one thing. And so you have to be okay with that. You don't have to master everything. You just got to know your peak formations and then what pattern you want to trade and what session. That's it. That's all you got to figure out, the main thing, and then build a plan around that. So we get into Friday. Immediately goes up on Friday. And same kind of scenario as before, where we're kind of okay, well, if it goes immediately up like that, there's nothing really to trade unless you get a type 4. Okay, now again, look what's happening when we get into the New York session. Okay, we have news also as well on Friday. But we get into the New York session here. Where is price? Right, price is nowhere near the high. It's all the way down here by the 50. So immediately, I'm thinking continuation trades. The only thing that I would want to trade. So the question is this a possible continuation trade based on, let's say, this being a railroad track? Well, I don't think it is, because it's not covering, again, 75% of the candle. So we're looking at 20 pips, and this is only 13 pips. So that's not a railroad track. However, it does close above the 13, so you could use that as an entry if you wanted to, or you can use, again, the 50% model if you want to use the limit orders. It's completely up to you, again, as a trader. So a 2-to-1 would be something like that for the aggressive trader, and then for the trader that's waiting for a major pullback, you're going to be looking at a trade setup like that. So again, just depends on who you are as a trader. And so in this case here, you would have the trader that was aggressive, that got in on this candle with no pullback. You're 1, 2, 3, 4, 5, 6 candles in. Are you in substantial profit or not? No, you're not. So that should be your time to exit the trade or get into a break even. You're the trader that waited for a better entry, which would have been on this candle here that went all the way down. Then you're 1, 2, 3, 4, 5, 6 candles here. You're not in any substantial profit, so you should exit the trade. This would have been a loss of about 5 pips or so. So again, depending on who you are as a trader, would give you different outcomes. All right. Now, as we close out this video, obviously, pound USD came off a reset, so it gave us essentially a trending cycle. We're going to get into all that stuff in later videos, and if you want to know about the weekly cycles and all that stuff, I've already made videos on all this stuff. Guys, I've already made videos about the entire strategy, right? You can go back to the Blueprint Summit playlist. You can go back to Trading with Market Makers playlist. You can go to the FXN Mentoring 2024 playlist. I've already made 430 videos on this strategy. So everything's already out there. So you don't need to wait for another video. Okay? It's already there for you to grasp and to get. All right? And I put it into playlist already for you, so you can just watch all that stuff. But you can see that because we came off a reset, obviously we went much higher, and that ended up translating into a trending cycle. Now, what do we expect for next week? All right, so if we just take a look at pure price action, all right, and this is, again, we're looking at it just from a bigger time frame so we can make it easier to understand. So far, right, we're moving higher. We're wanting to see higher prices. Well, if you know that below and above each pullback are going to be market orders, and price action is attracted to those market orders, we're probably going to still look for more higher prices, probably going up to 130. So those would be the targets. This area here on the daily time frame would be the target for next week. So I would still be looking for buys next week, okay, and seeing how everything goes. Obviously, anything can change based on a Trump tweet or whatever he wants to say, but just keep in mind that as of right now, I'm still looking for more dollar weakness. Okay, we still have huge news next week coming out. We have CPI on Wednesday, and then we have PPI on Thursday, and then consumer sentiment on Friday. So we got a lot of news coming out this next week for USD. We have job openings as well on Tuesday. So there's a lot of things happening next week, so just be aware of that. But based on just the daily time frame, based on the weekly time frame, okay, it's very simple. We're looking for prices to go higher into this area here of the 130s. So again, the daily, this area here is where we're looking for prices to go to. That's it. All right. So guys, I hope that this video brought you some value. I hope you learned a lot from this video. Again, we're going to look at all of the other pairs. We're going to do another review on gold, NAS 100, and pound JPY. So hopefully you got a lot out of this video. If you guys need help with peak formations and things of that nature, check out FXN Plus. I do this for you so you don't have to. All right, until the next video, guys, have a good rest of